Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
My name is Rob Clayton and thank you for joining me. The Australian dollar remains under pressure after breaking below the key level briefly at 70 cents as stronger than expected US inflation boosted the greenback and reinforced expectations that the Federal Reserve could keep interest rates elevated for longer. According to the US Bureau of Labor Statistics, headline CPI accelerated to 4.2% in May, the highest annual reading since May 2023, driven largely by rising energy costs. The inflation data has shifted market focus away from rate cuts and back towards the possibility of a further policy tightening. Meanwhile, renewed concerns over tensions between the US and Iran have supported demand for the US as a safe haven, lifting the US dollar back to the level now of 100. This could be the last test up at this level or just beyond there, as I feel the market may correct very soon. But still, the market is still poised for another down test for the Australian dollar as all eyes now turn to the US producer prices for further inflation clues. From a technical perspective, the ADX is supporting the bear trend very firmly here and therefore could see the market retest the lows around 69.70 or even see trigger stops down towards 69.2025 and then expect the correction back to 71 cents. Turning to the euro, well, it's a little bit mixed ahead of the European Central Bank policy decision, with markets fully expecting a 25 base point rate hike as policymakers confront rising inflation and higher energy costs. The focus now shifts to also the ECB President Christine Lagarde, with traders looking for clues on whether today's move marks the start of a more aggressive tightening cycle. Any hawkish guidance could prove fresh support for the single currency, while a cautious tone may leave the euro vulnerable to renewed US dollar strength. Technically, though, there is a little bit of a recovery here, but looking at these candles, somewhat negative, and therefore I feel we can still see a down test somewhere towards the region of 114.40.50 and reassess from there. Turning to dollar yen, well, the market is still pressing to that crucial level around 160.50 to 161 figure zone, placing the market back within the sight of this 160.70 peak, which is around here where it is much talked about that the Bank of Japan intervened. Nevertheless, still keep an eye on this pattern here. There is divergence, and I still feel there is a bit of a tired pace coming into play now, and I'm still negative and expecting to see one of these candles come through and drop back towards 158. Looking at the pound, well, the market is still a little bit indecisive as it stabbed at the top side as it now waits for the next crucial data, being the UK GDP, which is expected to be released on Friday, and let's see how the market unfolds from there. Technically, though, the MACD is still somewhat negative, even though the RSI has improved, but mixed at the midway point. So we could see a test back towards the bottom side around 133 and reassess. Another further downward play when it comes to commodities, looking at gold, as it now focuses on the lows around 4,000. It could actually see a move towards 3,950.80 area before any correction, due to the fact that the ADX is still very strong. Looking at oil, well, the market did rebound off that key level at $84 a barrel and finding a little bit more tension to the upside. But the technicals are still a bit lackluster. Keep an eye out in case we see a brief return at $84 and then the correction back to $96 to $98 a barrel. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report and I hope you enjoy a great start to the day.